All right, so we're just trying to make sure we got everything yet. Hi everybody, thank you for tuning in.
Hello, everyone.
We're trying to get it going. Just a second here. Trying to make sure we are in TikTok, not TikTok, but Instagram. Make sure it goes. Oh, it says go live. I'm trying to see. Alright. Still ain't doing it. What's going on? All right. So the thing about it still ain't letting me go live on there. That's the thing I don't understand. It says
Can we just record it then?
Yeah, it'll be recorded. I just hate that it's happening though because it should be live, but it is what it is. I'm not gonna stress about it. We're already live anyway. So the good news is we're already live. And let me see if I can sit over here. You can see us right there.
Okay.
So we're looking over here though. Okay. Anyways, hi there, everybody. Thank you for tuning in. Yes.
Hello, my name is Elisa Bannister, and this is the year 2024. And the rates, the mortgage, according to the Mortgage News Daily, the average national mortgage rates will be around 6.75 conventional, 30-year 6.05 percent conventional, 15%. Can we start?
Actually, there's no starting over. We're live. But anyway, Thank you for sharing that information. We're kind of fast. Mm-hmm. She's basically trying to go over the rates, and we were not yet ready because we were trying to make sure we were logged in on multiple platforms. But the good news is today's, according to the Mortgage News, she was trying to explain that the rates are now for conventional 6.75% if you're going to go 30-year, and then 6.05% if you're going to do a 15-year for conventional. FHA will be 6.2%. If you go to FHA and VA. So the bottom line is the rates have gone down.
And it's time to buy a house.
It's time. But at the same time, you need to understand things have changed. Each year, people are like, well, I'm going to wait. And the sad part is my buyers who decided to wait 2 years ago, who were qualified, but they had a hard time getting under contract, had another issue because when it came down to actually getting a contract, they decided not to proceed. They said, well, I'm going to wait. Maybe things will change the next year. Well, then after that, the rates went up. So what they qualified for before changed as well. So what you qualified before 2 years ago will change, meaning that it's decreased because of the rates. Your mortgage rates that you can qualify for varies based on what your income is. Your income determines what you qualify for. And because of the rate increase, it changes the qualifications for the mortgage loan. And so even if you were qualified before, because I have a few people reach out and say, well, I was qualified last year for $250. Why did they qualify me this year for $175? I can't find what I want for $175 because, of course, a house that's at $250 and $175 look completely different. You get more house and you may have a newer home, or it may look a lot better because of the price range. So the issue that I'm running into today is people who are qualified, but they're afraid of the mortgage payment because of the rate. Now, when I bought homes 20 years ago, everybody keep hearing me talking about this, the rates are where we are now, if not higher. We were more concerned about owning something because we never saw 3%. when I was 22, when I bought my first home, and it was like $800 and some dollars, and that was 120 back then. So that was FHA loan. So obviously it wasn't that the rate wasn't that bad. But the following year, I turned right around and bought another house, a conventional, and I was paying about $1,200 a month. Okay, and during that time, a lot of people got locked into those adjustable rates. So nowadays, it's best to get a fixed rate. You can always refinance later if you keep your credit scores up. That's what I keep trying to tell people about, the importance of establishing good credit and making sure that you understand how credit works. I mean, I can't stress the importance of knowing how credit will be impacted based on what you choose to do. This is some things that people just don't get. I talk to people, we fix their credit, they end up coming back and they establish credit, then they want to close accounts. Your history is what builds your credit reports. You don't get good history unless you actually have activity. And without activity, your scores will not grow. And how you use accounts. So that plays a major role. But like she mentioned, today's rate, currently, we're still in the sixes. The bottom line is still in the sixes. It's not going to be a huge difference between 6.2 and 605. But the difference is it just depends on what all you're doing as far as if you're going to do a 15-year or 30-year. You have to do what makes sense for your family and what you can afford financially. Because, of course, if you're going to do a 15-year mortgage, you're going to be paying more for your mortgage monthly payment. So you might as well do a 30-year and contribute more and pay your house off faster that way as well. I did a video on that last year where we talked about how you can pay your mortgage off faster, even on a 30-year fixed rate. Just like when you buy a car, you have the right to pay more towards your payment if you can afford it. The problem is the average person cannot afford to make extra payments on top of what they're already paying. And most of the people I know now are paying high rent. They're paying anywhere from $1,000 on up. $1,000 is not necessarily high, but what I will say, when you're paying $1,500, $2,000 for a 1-bedroom or 2-bedroom, that is definitely high. Rent has gone up tremendously. And I remember when I was renting, the most I ever paid with rent was $800, and that's been a long time ago since I had to rent. But that's the most I was willing to pay because I had my mortgage. By the time I got my mortgage, it went from $800 to $1,200. And the reason why I'm mentioning it is, when you think about it, people are concerned about buying, and we're talking about people in their late 30s, 40s, and 50s. And if you didn't buy earlier, you're not going to get yesterday's prices for today. What people pay for homes and the rates we had 10 or 20, 15 years ago, the cost of living has gone up. So I can't stress the importance of finding your way so that you can acquire property, because the rates are going to keep going up. And they're going to always go back and up and down. That's just part of life. But the cost of living is always going up. It's always fluctuating. And it's always going up and down. This is why it's very important to solidify your cost of living and understand how that works. Because otherwise, it just makes it more difficult. It just makes things harder for you to get where you want to be. Anything you want to say about today?
Oh, well, now is the time to purchase a home. Whether it's your dream home or an investment property or anything that will be an asset to you in the future. And that's all I have to say.
And what are your thoughts on the fact that, some people feel like they should wait like next year or wait every year? What have we seen when they wait?
There's no guarantee that the rates will go down further, because the rates are always going to go up rather than backwards. So the time is now.
Okay. And the thing about it is, besides the rates, the cost of homes have not dropped. A lot of people say, well, maybe the price of home will drop. We can probably get a deal. $5,000 or $10,000 is not good. That's not a deal. I mean, it looks good. It sounds good. But if you find a house and it reduced by $5,000 or $10,000, that's not really a deal. Actually, it's not really going to help your monthly payments at all. No. What really helps your monthly payments is when you are in a situation that you can afford it, and you're going in making the payment that you can afford versus getting something you can't afford. Because at the end of the day, the cost of homes are going to keep going up. I can imagine when I bought my first homes at 150, brand new, I sold a home in the last 5 years in Calera, Alabama for 150 something. It came up to be about 160 by the time she closed. That was the last year I seen a brand new home for 150, 160 range. And that was the end of that. That's not something that is, matter of fact, Calera, Alabama was not a highly populated area. The build a few small homes, decent new homes, not nothing immaculate, but it was just first time home buyer properties for that price range. And that time, that ship has sailed. Everybody I know now who are looking for a home, even at 150, most of these homes need work. Most of these homes won't even go FHA. They don't qualify for FHA. FHA is first time home buyer, meaning that you get a federal regulated loan that gives you a discount, meaning like instead of you coming up with 20%, you're only coming up with 3% or 3.5%. But if you are trying to buy a home and you're actually seeking to do that, and you're going and looking for a house that's 100,000, 150,000, a lot of those homes won't even qualify because of the condition of those properties. And it's not just in Alabama. This is Georgia, Florida, Alabama. Look online. You will see that the value of homes have risen. And that's the point of being a homeowner. If you buy a house, you want equity to build. You don't want to be sitting behind. You don't want to be stuck in a home that you're upside down in. And that could happen too, depending on where you purchase. But for the most part, most people gain equity. That's the whole point of buying a house. Where you can have equity in your property that you can put in your will to sell the home, deed the home, rent it out, or whatever you want to do once you pay it off. But the goal is to acquire something, because when you're paying rent, you're paying 100% interest. There are times when we have to rent. Obviously, we all have, you have a reason why you need to rent. Not everybody need to buy right now, but it needs to make sense, because you got people who are paying $2,000, $1,500, $2,500, and even $3,000 for rent. And we're not talking about no high-rise apartment in a big city or no luxury home. Some of these people are not even living in a big luxury home. And then I do know some people who are, but they're paying somebody else's mortgage. They're building somebody else's wealth. Why not have your own instead of paying for somebody else's wealth or building someone else's financial stability? And one thing I say about owning home, it solidifies your stability for your cost for living space. Not necessarily the cost for living, because the cost of living is going to rise. Gas prices go up, electricity goes up, food goes up. Look, candy goes up, snacks goes up. What we paid for back in the day, we're not getting those same deals anymore. No more penny candy. No more 99-cent store. What is it, 125 now?
125.
Okay, everything is going to go up. So with that being said, what did that tell you? Your cost of living, your cost for rent, the cost for everything is going to keep rising. Every now and then people get a deal. I know people reach out and ask me questions about auction homes or foreclosures. Who's really buying those? What type of people is typically qualify for those type of homes?
Investors and people who are doing cash sales.
Right.
They're the ones who are more eligible to purchase that home.
Yeah. So that part. So, of course, Dorothy said she sold a home 2 years ago, a brand new home for 130. It was a Habitat house. Right. That's a special type house, specially built for a community with low income or, projects. They have special projects like that. And then, like I said, this was done within the last 5 years that I sold that home for $150K in Calera. But you're not getting deals like that everywhere.
No, you're not.
It's not a common thing where someone is actually getting 130K. So that's why I wouldn't even be marketing it, because I don't know anybody selling a home like that today. Do you?
No, I don't.
When we look on the MLS, or even if you Google, just take out all that. You can look online before you even consider buying and see what the houses are going for. And when you're looking online, you need to make sure you're looking and making sure it doesn't say under contract or pending or contingent. Those homes are not available. Look and see what's actively available for sale. Then you can also see what has sold. Pay attention when you're looking online, because oftentimes people looking online, they're not really paying attention to anything. They're just looking on there and they're not really understanding what they're seeing. They're like, oh, I seen this house for 150K. Now look on there, send me the address. Okay, that house sold 3 years ago or 5 years ago. It's not for sale. You need to understand when you're looking online, what exactly is it saying? Like Dorothy says, those days are over with. Those days are over with. At the end of the day, when you think about it, when you buying a property and you see what somebody else bought 5 years ago and say, well, my aunt bought a house, no money down, and she pretty much got 100, she even got $1,000 back. I've sold homes to people who've gotten money back. Not everybody get money back. Not everybody get down payment assistance. That's why you still need to have money saved and put to a side, because it's not a guarantee that you're going to have that. And these are important facts that you need to be aware of. So just FYI, prepare, prepare, prepare. The days are running short, and when it comes down to what you can get, it gets reduced. I got 3 people qualified to purchase now. 2 of them are under 200K. And they want to buy, they're strict about the house they want. They want to go lower because they worry about the monthly payment. But when they go lower, those homes won't even qualify for the loans they qualify. And they're going conventional. They need work. So you think about buying a home that needs work, unless you have money saved, you might be putting yourself in a more danger or having to pay out more money out the pocket once you get settled in and realize you could have came out better buying something already move-in ready. Now, each person has to do what's best for them. By no means I want to put somebody in a financial bind and buying something they cannot afford. So you don't have to purchase up to the amount the lender tells you, but you need to understand that obviously the cost of living is going up, the cost of home is going up. You're going to keep paying rent. And those who are paying low rent or living with relatives, you get stuck. You get stuck in that, meaning that you might not even like the place you live at, but you're stuck there because it's cheap. You stuck living with family members because it's cheap, but you still won't have anything for you, and you're getting older. Nobody's going backwards. We're getting older. So unless you have a plan or a purpose, like if you all are buying a house together and y'all have an arrangement that everybody's taking part in home ownership, you own nothing. If you stand in a family member house that belong to someone else, you own nothing unless you are part of the deal. There are people who are buying homes with families and they're going in as a group and purchasing a home. That's work. That's fine. At least you're doing something. But keep in mind, the cost of property and the cost of homes are going to keep going up. This is why people own. This is why people make plans. Because if you don't, you suffer. Those who choose not to plan to fail. You have to have what I call a strategy, a system in place. And this is something I had to learn because I'm the type of person, I like to do stuff. I'm very excited. I like to get involved. I like if I can make money, I'm on it. I'm an entrepreneur. Make it make sense. We have to have strategies and we have to have a system in place for implementation that allow things to last long and get results. I hope you guys enjoyed this video and you guys have a wonderful evening.
Goodbye, you all.
Goodbye.